Okay, good evening to you all. Welcome to today's section of the class. So today we will be looking at confluence trading and retest. We'll look at BBR strategy. We'll look at application of BBR strategy. We'll also look at chart patterns, and then we'll probably wrap it up with stop loss and take profits. Okay, so that brings us to the end of the scheme of work. The next thing we'll be discussing will be risk management, psychology, and then we do a top-down analysis, like bringing everything together to probably check for entry and all of those things that we have been discussing so far, how you can apply them in your day-to-day trading. So we are almost done with the class, and I hope that most of you that follow up in the class have gained insight in terms of what to do when you approach a chart. It will no longer be new to you. You can now tell the characteristic of a particular market phase, whether the market is bearish, bullish, or consolidating. So in our last class, we look at the concept of POI, we look at the concept of transition as a basis of reversal. And one of the things I told us in that class is that every reversal you can think of in the market starts with transition. And one of our class, we talked about the fractal nature of markets, which made us understand that whatever happened on the higher time frame replicates itself on the lower time frame. That means that for transition, for a market to transit on the higher time frame, that transition must have started from the lower time frame. So that is that about what we discussed in the last class. We also try to look at POI. As a trader, you don't just open your MT5 and start buying or selling. There should be a particular zone or level where you are interested to make a decision from, and that place where you are willing to take a buy or sell from is what we call your POI. So having said that, today we are going to look at the concept of confluence trading. Now, there is one fundamental truth about trading, which is it is a game of probability. Okay, what that means is that you can't actually tell what the market is going to do and be certain about what you have said. If I tell you a particular market is going to buy, or when you hear people saying things like, I know this market is going to say, I know it, that is a wrong mentality or mindset about the market. When you're talking about probability, there is no certainty there. You're only working with sample size. Okay, so one of the things that gives you an edge in the market is having many confluence. And what do I mean by confluence? Having multiple reasons why you are making a decision. Okay, so that is what confluence trading is. Confluence trading simply means having more than just a reason why you are making a particular decision in the market. When you have, the more reason you have, the more reason you have to take a buy or sell, the more probable it is that that trade is likely to turn in your favor. So having said that, when you have a situation of this nature, you have a market, say the market is a bullish market, showing us this type of characteristic. Assume this is a market that we approach, and we are willing to make a decision from this market. The whole idea of what I want to pick up from confluence trading is just having multiple reasons why you want to make a particular decision. Now, the first thing you want to do, you want to check the time frame you find yourself. And of course, you have to go to the higher time frame to check for what the trend of the market. So assuming this is our higher time frame, by looking at this market, you can see that the market is trending to the upward direction. As a trader, apart from physical observation, you should also tell other characteristics such as where a break of structure is happening, or where is the recent market range for you to know what is happening. So with this, you can see that the market created a low, created a high, a higher low, a higher high, a higher low, a higher high, a higher low, a higher high, a higher low, and a higher high. All right. So we've talked about expectational order flow, and what it simply means is what are we expecting the market to do next? We understood by what we have learned in our previous classes that there are two moves you can see in a market. It's either the market is making an impulsive move or is making a corrective move. And when you meet a market that is bullish, just like this one, we say that the move that causes a break of structure to the upward side is the impulsive move, and the move that creates a higher low is called the corrective move or pullback, as the case may be. So in this scenario, we have that the market has just made a pullback. So we are expecting that the market will do what? Probably go up to create a new higher high. But the question is, you have to know where to take your entry from. So suppose you come to the lower time frame and you have been able to, or after marking your level, you have been able to take and mark out your support and resistance level just like this. These are different levels of support and resistance. For those of you who are in the signal group, you will get familiar with some of these things that I'm saying right now. Because sometimes when I send signal, you will see something like this, different levels serving as our POI. And sometimes I will drop a note explaining that you have to be patient for the market to get to this particular level before before you can be thinking of taking a buy or a sell. So now, when you see the market in this particular level, one of the things to have good confluence is that you can see that the market is on a support level. That is one reason, right? The market is on a support level. That is one reason telling you that it's possible that this market will start buying from this zone. So when you now decide to add other reasons, what are the other reasons? I can decide to carry my my trend line and draw it like this. Okay. Now, when you check, aside the fact that the market is on a support level, we also have a trend line. Now this trend line is serving as a confluence to the reason why I want to take this buy from here. What is the first reason? The first reason is that the market is what? Bullish. We've been able to identify that. The second reason is that the market has retraced back to a support level. Okay, and we know that after a retracement or after a corrective move, we should expect a what? An impulsive move in the direction of the trend. So that is that. We now have another reason, which is what? The confirmation of trend line. The market came down to retest a particular trend line level. So because of these reasons because of this reason that I'm giving you, it is now easy for you to be more confident in yourself that this trade is a high probability setup to take. Meanwhile, that doesn't mean that you cannot take a loss when you have a confluence trading. No, because trading remain a fact, as I said from the beginning of the class, that it is a gain of probability. So don't imbibe the idea of thinking that because you made your analysis, it should go according to what you have said. You have to be very open-minded to the reality of trading, that it is what? A gain of probability. So that is that about confluence trading. I believe this is more um simple enough for us to understand. And when you have a bearish scenario, when you have a bearish scenario like this, is the same explanation. Okay, is the same explanation, because right now I can say that this is actually a level the market have put up to. You can also see that there is a sort of trend line here. Okay, so because of what you have seen here, look at the first touch, the market crashed down, second touch crashed down, third touch, and then the market is currently happening here. So we now have the confluence of trend line, support, and market trend. So you have a very good reason why you should take a sell from here. Okay, you have a very good reason why you should take a sell from here, and then target the next turning point in the market where you think the market can actually reverse. So that is that about confluence trading. That is that about confluence trading. So I believe you guys have understood what I have said so far. So this is just how you target here as your take profit. Okay, sometimes you can decide to use two different take profit level, and then you call this point your TP1 and this is your TP2. So whenever you see me, for those of you who are in the signal group, whenever I drop a signal that has this format, what it means is that once you see these horizontal lines, what they are telling you is that these are different levels of take profit. If you want to take you can decide to take your profit at this level. You can also decide to take your profit at this level. It depends on your style of trading. There are some people that cannot hold trade for a longer time. They rather prefer to hold it for quite a small time and then take their profit. That is why I normally have different levels of take profit so that the trade can suit any style of trading. So I hope that is taking. So the next thing I want us to look at quickly is the BBL strategy. Okay, so this is the strategy that I've been using to trade. Is a very simple strategy, no stress, no complications. I'm going to keep it very, very simple. Just get it once and for all. This is what I've been using to trade, and it works in the market. Yes, no strategy is an holy grail. I quite understand that, and it's good that we acquaint ourselves with that fundamental truth. But then, when you have an edge, you just have to stick and work with it. Now, what is BBR strategy? The word BBR actually stands for, we have B. This is what BBR stands for. We have break of structure, break of, sorry, we have break of trend line, break of structure, and retest of the broken structure. Now, what do I mean by break of trend line? You have a situation, you have a market phase such as this. Okay, you can see that this market is actually a bearish market, all right? And you can actually draw your trend line in this scenario. You can draw your trend line to look like this. For you to know that a particular trend line is valid, you have to consider the number of touch. Once you have up to 3 touch, you can say that such a trend line is valid. Now, this is actually a trend line. For you to be able to identify, or for you to be able to use this strategy correctly, the first thing you need to understand, or the first thing you need to pay attention to, is that there is a break of trend line. That means that you want to see this trend line being broken to the upward, or to the upward direction. Okay, that is the first step. All right. The second step says break of structure. What do I mean by break of structure? When you study the structure of this market, you can see the market creating series of what? Lower lows and lower highs, lower lows and lower highs, lower lows and lower highs. So this is a structural level because this is what? A lower high. All right. This is a lower high that created this lower low. So the next thing you want to see is that there is a structural level here that this market is going to also break. The first thing is what? A break of trend line. The second thing is what? A break of structure. For your ability to identify this structure is very, very important. Now, the next thing you want to see after structure has been broken is what? Retest of the broken structure. That means you expect this market to pull back to where, to the structure that it has broken, and then you find your entry from here using your candle confirmation or any other confluence. By using the word confluence is no longer a new thing for us, so that you can take the entry from here and target any of this structural level as your TP. So it's it's a very simple strategy. The first thing you need to do, you need to note is identify a break of trend line. The second thing is identify a break of structure. The third thing is look for retest of the broken structure. Okay, now the flexibility that you need to apply in using this strategy is that this strategy can come in different form. For instance, you can have something like this. I'm using a case of another way you can see it is when you have a market condition like this. Say the market creating series of lower lows, lower high, lower lows, lower high, lower lows, lower high, lower low, and then you see something like this. Now, what is the difference between this guy and this guy? You see the market creating what? A high, a low, a lower high, a lower low, a lower high, a lower low, a lower high, a lower low, a potential lower high, and a failed lower low. Why do I call it a failed lower low? Because there was no structural break. Remember the characteristics. You can see that all of these things that I've taught you guys previously are connected. That there must be a continuous break of structure to the downward direction. But at this point, the market did not break structure to the downward direction. That means that this is actually a failed lower high. All right. So what you see is that the first thing you have to look for when you see something like that is to identify that trend, that break of trend. And once you have been able to identify that break of trend, you have this is what we call a double bottom, which serves as a confluence for what is a sign of reversal pattern that shows that a market wants to buy. Okay, so this is a double bottom, but according to our strategy is that you have to identify that break of trend line, which you have done. The next thing is what? Break of structure. Now the break of structure have to be a significant lower high. All right, and this is a significant lower high. That means that you expect this market to break from this level. So as a trader, what you do is you have to be patient enough for this market to actually break out of this structure, and the next thing you have to wait for what? the retest of the structure, and you take your entry from here to your significant level. Okay, so this is the second phase. This is the second way you can actually see the market will create a kind of double bottom here. If you reverse this thing, it will be in a bullish scenario, but then I'm just using a bearish scenario to explain this concept. Okay, then the next point you can see, or the next way you can actually see that this thing happen, is you see a market having this structure: a high, a low, a lower low, a lower high, a lower low, a lower high, a lower low, a lower high, and then you have something like this. So the first thing, like I said, irrespective of how the shape is looking, is to identify your trend line, that ensure that that trend line has been broken. That is one thing which we have done. Now you study the structure, you can see that this is a high, a low, a lower high, lower low, lower high, lower low, lower high, lower low. All right. But then after this lower low, the market made a potential lower high, and we expect that the market is going to create a lower low. But instead, there was a break of trend line, and immediately that trend line is broken, the next thing you want to identify is where is the recent or significant lower high. It is this level. So you want to put your support level around that zone. You want to put your support level around that zone, and then you want this market to actually break out of that guy. So the moment the market has broken out, you look for your entry from the retest, and then you target any of your level as your target point. Okay, so these are the different scenario in which this thing can play out. What is very important for you is always find a possible way to identify the recent lower high that was broken by the market. Okay, this particular region you are seeing here is what they call, this particular thing I'm circling here is what they call inverse head and shoulder. This is inverse head and shoulder. These are the two shoulder. Okay, if I reverse it, it become head and shoulder. For head and shoulder, this is how it looks like. You have something like this. So this is head, sorry, shoulder, head, shoulder. So they call them head and shoulder pattern. So this, for head and shoulder pattern, it tells you that the market wants to start selling. But for inverse head and shoulder pattern, is a reversal candlestick pattern. Okay, so that is that about the BBR strategy. It's very simple. What you just need to pay attention to is what you identify your break of trend line, you identify your break of structure, and then you go for what? Retest of the broken structure. So let's look at the live chart application of it, and then see if we can talk about take profit and stop loss. So suppose this is a market we intend to analyze. This is B25. This is B25 1S. We intend to analyze. I will just work on this particular time frame so that it will save our time. Okay. So when you want to apply BBR, the first thing you want to do, because we are assuming that the trend of this market is bearish, right? The trend of this market is bearish. So you should be looking for you must have studied your higher time frame perspective to see or to know that the market is actually bearish. Then you want to look for entry. When you come to the lower time frame to look for your BBR, the first thing you want to do is to identify a trend line like this. Once you have, or you can also decide to draw it. When you come to the chart, it will no longer be as perfect as you may want it to be, but you just have to understand how the concept works. Okay, you draw your trend line, and then you'll be able to identify because the market is creating a series of higher lows and higher high, and this was the previous higher low that created this higher high. So this is your structure. You have to ensure that this level is broken. And of course, you have seen that the market has broken out of this level. So the next thing you want to do is exercise patience or you can, if you see other structural level, this is also a structural level, because this is also a higher low that causes a break of structure to create this higher high. So when you see it as well, you can also outline it. So what you want to do as a trader is you want to wait for the retest of this thing to happen in order for your PBR to be complete, because now you've seen a break of trend line, from a break of this trend line, you've seen a break of structure here and here. The next thing that is we are waiting for is what? A retest. And this retest can happen at this structure and crash down, or it may decide to go up here and also crash down. So for those of you who are in the signal group, you must have seen something like that, that when I have two zones, sometimes I will tell you that the upper zone or the other one is also a significant level. That means that when you enter a trade from this level and probably this plot, it give you a confirmation candle and it hits your SL, you don't need to panic. You just have to be patient and wait for the second entry or the confirmation entry. So that is that about this particular level. Let's look at other pair. So I want to look at the point where this sorry, I have to go to the 4 hour time frame to check for it. All right, so now when you look at this particular level, the market is bullish around here, because after transition happens here, you see here, the market created a low, a lower low, a lower high, a lower low, and then the market transits by changing character around this region. And you see the market has been bullish, creating series of higher highs and higher low until it gets to this level. Now, when you want to apply BBR, after you must have studied your structure, the first thing you need to do is look for where that break of trend line is happening. Look for that possible trend line that you can think of. Okay. Now, this is a trend line. This is a trend line. You can see that this trend line has been broken. Now, when the trend line is broken, you want to identify a different structural level. So this is a structural level. This is a structural level. This is also a structural level. Okay. Now, after the break of this trend line, we also have a break of structure. Where are the structure? This is a structure that was broken. This is also a structure that was broken. The first example I give you guys, I told us that in the case where you have more than two structural levels, all you just need to do is to be vigilant. Now you see that the market actually come close to this structural level, gave a candle confirmation and actually sell for some time. All right, and then what happened is that the market still reversed. So for those of you that, or what you can do is, when you have a situation like that, if you are anticipating to open a higher lot size, because of the fact or the possibility that you know that this market can also reverse and come up to this level to retest it as a valid structural level, all you just need to do is do not take much risk from here. If you are anticipating to take like 3 positions, you can decide to open 2 or 1. All right, having it in mind that it is possible for this market to reverse against you, and also if it doesn't reverse, you are not going to miss out in the trade. So this is how you position yourself. Now you see that the market went up to retest this level. Okay, after the retest of this level, you can see since then the market has been selling. It has been selling even up till this very moment. So this is how you can actually identify your this is how you can actually identify your or how you can actually apply your BBL strategy. So just to summarize everything I've said so far, the first thing is study the trend of the market. For instance, if you have a bullish market in this case, having this characteristic, okay? If you have a bullish market in this case, having this characteristic, this is the higher time frame. When you come down to the lower time frame, now this is the point, this is the part that you'll be applying the BBR on. Now, when you come down to the lower time frame, this point I circle is going to look like this. You are going to see a substructure of this kind. You are going to see it like this. This is what you are going to meet on the chart. Now, how you know that it's time for you to start looking for a buy? Because one thing you are sure from your study of higher time frame is that this market is bullish. But the issue you're having is you don't know where this pullback will stop before the next impulsive move. But when you understand the concept of transition and then you want to apply BBR, because BBR actually starts BBR actually starts with what? Transition. So the first thing you want to do when you come to the lower time frame is your ability to identify that trend line. Okay, try to identify the trend line. The moment you identify the trend line, the next thing is to be patient for the trend line to what? To be broken, which is what is discussed on transition. All right, we have this broken structure, and the next thing is a retest of the broken structure, and then you take your entry. Now, one thing for those of you who are in the signal group, this class will really help you a lot, because when you have something like this is a structure that was broken. This is a broken structure. This is also a broken structure. Many a times you will see me have something like this. Many a times you see me have something like this, and then you will see an indication. You will see me, I'll put a sign or a circle like this. Now, what it means is that there are two entry here. You can buy from here, you can also buy from here. The difference between this guy and this point and this other point is that this particular point is actually a conservative entry point. This second entry is a conservative entry. It is safer to enter from here. But there are two types of traders. There are some that are very aggressive, and there are others who are very conservative. Conservative in the sense that they have learned the act of exercising patience to the maximum point, whereby they are not willing to take a rush in the market. So for aggressive traders, they can decide to take this first entry without minding whatever happens. But for conservative, they want to be patient enough to wait for this trade to break the first structure, break the second structure, and of course, they want to take entry from the retest of the second structure. So this is how you can actually apply your your BBR strategy. So I hope this explanation is clearer. One thing I want us to talk about quickly before we round it up is stop loss and take profit. And the only thing I want to point out there is, where do you put your stop loss and where do you put your take profit? Now, once you've done your analysis, your stop loss, the kind of this strategy is working, is a strategy that respects structure a lot. Very important. It's a strategy that respects structure a lot. So for every structure you are making entry from, your SL is supposed to be below that structure. For instance, this structure you are seeing here, my SL is just going to be below the structure. Now, this is going to be the region of my SL, this particular point you're seeing here. If I am making entry from this first place, if I'm making entry from this second place, of course, my SL is going to be around here. Mind you, it's also important that you pay attention to your candle confirmation. For me, the type of confirmation candle I look out for mostly is rejection candle. That is why many a times, whenever I want to make a call for on the signal group, I will always tell you to wait for this candle to close. If the candle close as a rejection candle, then it's time for you to enter, because that is my confirmation candle. So if the candle give me a rejection candle, what I will do is, if I am buying, my SL is going to be under the rejection candle. For instance, look at this particular point you're seeing here. If I am taking a sell on this trade, my SL is just going to be somewhere here. My SL is going to be somewhere here above this rejection candle. That is how you put your SL. So now, where should I put my take profit if I'm making an entry from here? You target the nearest turning point. What are the nearest turning point? The nearest zone. For instance, I cannot enter this trade and neglect this level here. I cannot neglect this level here. It doesn't make sense. So the most significant place that I'm supposed to take my take profit is here. If I am selling from here, I should be targeting this particular point. If I'm selling from here, I should target this particular point. So you target the nearest turning point in the market. If I'm making an entry from this guy, I am targeting this level as my take profit. Okay, so I hope you guys are getting the whole gist. So this is how you can actually start applying these things to your trading routine. When you make an entry, look for the nearest turning point for your stop, for your take profit, and then also depending on the type of candle you are seeing, you use structure as your stop loss level. So that is basically that about stop loss and take profit level. Okay, so I believe you guys have understood everything I've said so far. This is where we'll be stopping for tonight.